Hello and welcome to our first carrier update of the morning. This is of course brought to you by Powerfleet. I'm here with the one, the only, the Sultan of Sonar, Zach Strickland. Zach, what are you starting off with?
Yeah, so just a quick update on our outbound tender rejection index and outbound tender volumes. The market does appear to be stabilizing a little bit of downward movement on both the tender volumes and tender rejection index, but nothing that's trend breaking or making me think that we're seeing anything dramatic happening. You know, with the day over day situation, this trend line, I'd still call it kind of a horizontal move since we ended April, started May. It feels like we're at least approaching a bottom if we haven't already reached it for some sort of temporary period of time. Now, you heard Craig yesterday talk about the potential of that China shutdown, especially Shanghai, to imports and things like that. There is a question of how much that actually matters in the near term, or will it manifest itself more so in the long run? Because a lot of that freight, doesn't necessarily need to be moved right now. Right. You know, it's got some time to get here, and they've got some time to kind of get over this. They've got a bunch of congestion at the ports and everything, but it's still, we still have a bunch of supplies in the fall that a lot of the shippers haven't ordered for because they kind of stopped their ordering process, midstream in February because the inventory buildup. So. Still a lot of questions around this market, and the sense of urgency probably gone for now, but that may change a little bit later. I mean, it's going to be an interesting quarter for sure because we're entering summer. Produce movements are going on right now, but we also have a little bit of disruption around the Mexican border that's been ongoing for the last month or so that we'll get into here in a little later. But let's go on to the next chart here. I wanted to illustrate regional fluctuations in the tender rejection rates. The Midwest is the largest single region of the United States by our definition. It's basically the entire upper, from Minnesota all the way over to about Ohio. Okay. So it has Columbus, Joliet, Chicago, Detroit, all of that is in that Midwestern corridor. Has the highest rate of rejection right now still, 11.8% on that, but it has been one of the fastest to contract over the last month or so. On that same note, the Northeast there in the fuchsia color, Mike's favorite color, it is also one of the fastest to contract over the last month or so, but it is easing rapidly. We're down, now instead of it being about the third highest rate of rejection, it's now down at around fourth, getting closer to being fifth as it really starts to ease up out there. And that's typical for the Northeast this time of year.
That's going to be one of the other things is what to expect during this time of the year. I know we're talking previously, hey, we can't look at a lot of previous data sets to kind of predict what's going on now just because we're hitting different nuances, different variances. There are different levers being pulled right now that's kind of skewing a lot of different factors here.
Yeah, exactly. So, I mean, seasonality's kind of been broken. Yeah. And it's really hard to tell what seasonal influences are occurring, especially when the market is transitioning. This is what we're doing right now. We're in a transitional state. The Northwest rejection rate there in the orange, definitely one to call out here since the start of the year. Northwest typically kind of dies out first quarter. That is very typical and seasonal to see. So they are following their trend line there, and they are all the way down to that 4%. Now, I got to call out the West Coast. The West Coast, 3.1%. Basically Los Angeles. Yeah. Los Angeles drives most of this because it's about 7 to 8% of the overall freight volume moving in the United States. So it really drives a lot of that rejection rate there. You do have Phoenix, and most of those markets are all backhaul markets after you get out of Los Angeles in that region there. So the point is that carriers have oversupplied this region more so than they have in the past. All those high spot rates and everything has kind of drawn the carriers into this region, and now there's plenty of, they're still covering the contract freight, which there's plenty of, but we talked about short haul freight now instead of long haul freight, keeping them busy, but they're gobbling all up, so the spot market is basically gone.
Yeah, I think that's a great point. You're talking about that a little bit earlier in the week when we were looking at the West Coast. The lengths of haul that are shifting in that region right now, definitely you highlighted just now, that short haul really being the prominent mode right now.
And that's another reason that rejection rate is so low, is because carriers don't reject short haul freight as much as they do the long haul tweener freight, which is that stuff that moves about 450 miles and more. The mid haul freight can be a little tricky too, depending on the origin, because of the hub markets and whatnot. But yeah, the market itself, you can see all the general directions though to the downward side, a little bit of flatlining as we approach zero. The good thing about the tender rejection index, we do have an absolute bottom. It cannot go below 0%. So as you approach it, you would expect it kind of start decelerating a little bit. And that's what we're doing. But some of these regions having some nuance among them as they ease.
Definitely, Zach. Well, I'm looking forward to the next carrier update as well. This is a great start so far. Looking forward to what you have in store. Right now, we're going to toss it back over to Michael Vincent and Sydney Edwards.